It's been another active day for NIO stock, and while we saw a slight pullback during Tuesday's trade, the overall picture for NIO is still showing strong momentum as we close out a red-hot July. Let's unpack what happened today, what's driving investor sentiment, and where this story might be headed next. NIO closed the day at $4.51, down just over 4%, but the volume was actually a bit lighter than what we've seen over the past few sessions. This suggests today's dip may have more to do with short-term profit-taking than any real shift in fundamentals. Remember, this is a stock that's rallied over 40% this month. After a run like that, some cooling off is normal, even healthy. The rally, of course, has been driven by a mix of factors. First and foremost, NIO's expanding footprint in the mass-market EV segment is gaining real traction. June delivery data showed that more than 40% of its vehicles came from the Onvo and Firefly brands, vehicles that are positioned squarely in the affordable, family-oriented space. That pivot beyond luxury EVs is key, and it's something we've been pointing out in recent videos. These sub-brands aren't just rounding out the portfolio, they're taking the lead in terms of volume and relevance. And behind the scenes, NIO has been busy reshaping its internal structure. They're integrating Onvo and Firefly into a leaner operating model. The goal here is clear: cut costs, simplify management, and get the company on a path to profitability. It's ambitious, but it's exactly what long-term investors want to see. CEO William Li has made it clear, he's aiming for adjusted profitability by the final quarter of 2025. That means tightening the ship on both R&D and SG&A spending. Specifically, NIO wants to get SG&A below 10% of revenue. It's a big ask, but if they pull it off, it changes the entire investment thesis. This is no longer just a speculative EV play, it's a company with a roadmap to sustainable margins. And don't forget about battery swap. This part of the business has often been overlooked by Western investors, but it's a cornerstone of NIO's long-term moat. Right now, around 20% of NIO swap stations are already profitable. That's a huge development. Not only do these stations drive loyalty and convenience, they're also a path to recurring revenue. No other EV player has this infrastructure advantage in quite the same way. Now, as we saw with today's price action, the road forward won't be straight up. After a 40% rally, some selling pressure is to be expected. But one thing that hasn't changed is the underlying setup. Short interest on NIO stock still sits around 9 to 10%. That's high. And when a stock has strong delivery momentum, a profitability target, and a unique infrastructure angle, all with elevated short interest, that's a setup where squeeze is still very much in play. What we'll be watching next is key. First, July delivery numbers are expected in just a few days. If they build on momentum from June, particularly for Onvo and Firefly, we could see analysts begin to revisit their models. That could mean upgrades, or at the very least, renewed institutional interest. Then in August, we get Q2 earnings. This will be the next big checkpoint for the narrative. If NIO can show meaningful progress on cost controls and delivery strength, it validates the long-term thesis and reaffirms the roadmap toward profitability. Investors will also be listening closely for any new guidance or commentary on future production goals. Let's also not overlook the broader macro context. China continues to roll out EV-friendly policies. There's talk of curbing the price war that's hit margins across the industry, and Beijing appears to be leaning into stimulus measures to boost consumer confidence. If that trend continues, it could be a tailwind for the entire EV sector, and NIO is positioned to benefit. So where does all this leave us? In short, NIO may have taken a breather today, but the bigger picture hasn't changed. This is a company that's pivoting hard into the mass market, tightening its cost base, building out unique infrastructure, and attracting investor attention once again. The stock might be down on the day, but the setup heading into August remains as compelling as ever. If you're bullish on the EV future, if you believe in China's rebound, and if you value innovation like battery swapping and brand diversification, then NIO remains one to watch. And for those already holding, today might just be the calm before another storm. Stick around, there's more to come.